You came up with results yesterday showing an 11%, well, 10.5, 10.6% increase in your distribution. In this market, in this environment, that's not to be sniffed at.
No, we're very happy for two reasons. One, I think it's above general market expectations. Secondly, I think it's probably above the mean of the market. And the lastly is it's the first year for a long time that Pangbourne's actually distributed a clean distribution. What I mean by that is that it really is a focus on property and annuity income. In other words, income derived from rentals, as opposed to a lot. During the heyday of about 2-3 years ago, a lot of fees were built up in the form of development fees, letting fees, etc. Now we've cleaned the portfolio out as part of our operational cleanup, and it's rental income that we're distributing now.
Yeah, and the nice distribution as well, 10.6% in an inflation environment of about 6-7% is, as I said, not to be sniffed at. But that suggests that perhaps the space where you're operating in is not too bad, considering the general state of the economy. Is that accurate?
Look, I think property is a fairly stable investment. If you take a long-term view, you're going to get your ups and downs. But as a general rule, it's not bad. Plus, particularly in the case of Pangbourne, we've done a lot of hard work cleaning up the operations. Secondly, we've also cleaned up the structure, so the balance sheet is clean. We've got good access to funding. In fact, we've got about 850 million rands worth of unutilized facilities, which is good. It allows us to be positive going into the new market, and hopefully we'll be able to pick up some acquisitions going forward. Yeah.
Now we heard yesterday from President Jacob Zuma that the economy is turning the corner, and your numbers seem to be suggesting that it's not too bad actually, because when I look at your vacancy rates, 6.72% in this last half versus 6.68% in the previous half. Now that suggests stability in that sector, and also suggests a vacancy rate that's not too bad given the poor state of the economy that we're coming from.
Yeah, 6.68 is something that we are satisfied with because it's stable. We'd obviously like to see that at around the 2 or 3s, which is a kind of historical low, if you like. But it is pretty good. Obviously, the shift has changed. Perhaps you've got a slightly bigger vacancies in the commercial market, and the industrials picked up. But what we're very happy with is that we're seeing a lot of interest, and 2010 has been very good so far. We've seen a lot of interest in buildings where we had historical vacancies. Some of our historical speculative developments, which were pretty vacant, have now, the take-up is coming through, and it's looking very good. Still, the logistics, they're still struggling. Hopefully, as we get closer to the World Cup, we will have take-up in what we call the bigger boxes, so the 5,000 to 10,000 square meter warehouses. Still not seeing a great uptake in those areas, but all in all, a very positive start to 2010, yes.
Where are you seeing strength? Because, I mean, you make the distinction between commercial as well as retail, as well as the big boxes that you talk about. But where are you finding strength right now? Where are you finding pickup and take-up is actually tracking higher?
Well, we're seeing strength across all sectors. I think commercially, we have personal concerns. Pangbourne has concerns about certain nodes. So, for example, Midrand at the moment, Midrand offices, a bit of a problem because access and egress is so poor. Yes, they're doing a lot of infrastructure development there, but of course, for the time while they're doing the infrastructure development, you can't get in and out of Midrand. So we're a bit concerned about that. Sandton CBD, we were discussing it before the interview, getting in and out of Sandton has become problematic. So we're a bit worried about it, and there's a bit of an overbuilt here. You'll see if you just gaze around the Sandton CBD, there's a lot of cranes. So that means people are building offices here. So maybe we're not that bullish on Sandton CBD. But the retail's been very strong, and I think it's historically because South Africa's had a relatively under-retailed, kind of attitude, and we've seen a lot of strength in the retail, and industrial is always strong simply because there's a lack of decent space.
Yeah. Now, you are one of the big boys. I mean, the property is worth about 10.5 to 11 billion rand, so definitely you're not to be thrown around. Is there room, do you think, to take out perhaps some of the weaker guys? I saw in the previous half you bought, what was that, Fortress, R1 billion?
Look, there's always, and capitalism works like that. In a market where there's the strong and the weak, there's always the possibility of corporate action. I don't know if you're going to see necessarily consolidation in the sector this year or the next year. A lot of us are focusing on our own property. So instead of having a look at an external focus, we're looking internally and just making sure that our properties offer the best space available.
But are you saying the environment is not right for that kind of activity?
I can't say that it's not going to happen with somebody else, but for us at the moment, we're going to concentrate on our operations and clean up. If an opportunity arises, of course, we're not a charity.